We'll be back from the break, and we continue with our discussion of competition of income tax and business income. But pretty much just to remind you that investment with Zabu makes life easier with the platform powered by Altex East Africa, which says do something new today. Of course, with Zabu, you can register with your NIN, and in the next 24 hours, you'll be ready to invest in bonds and securities. Dial *292# for the MTN subscribers and make sure that you access all of these particular bonds and other products that you can invest in. Make your money count today. So Zabu says, my money, my future. Zabu is powered by Altex East Africa, which says, do something new today. Markets open at 8:15 a.m. and close at 3:15 p.m. East African Standard Time. These markets are closed during weekends, and they are also closed during public holidays. So out of which, if we continue to drive your business here, but to remind you that investment is not an option. It should be a priority for you as any other individual. Well, on the other hand, still with our in focus, our topic here is with competition, is regarding competition of income tax or business income, and I'm still with Twaha Kayondo Mlangira from the Domestic Taxes Department, URA, Domestic Taxes Officer from the Uganda Revenue Authority. So, Mr. Kayondo, as we continue here,
yes.
How is tax determined for a business owner?
Joram and the viewers, at URA, we determine tax factoring in the different tax rates as per the laws that govern tax administration in Uganda. That's how we determine tax. You realize that the different rates apply the different chargeable income.
Okay.
Say it could be income tax, which will be charged at 30%. You would realize that it can be, say, rental income, okay, which has its specific rates and the manner in which calculation is done, what is allowed, which percentage is allowed as expense for the income, the expenses you did while deriving the rental income. So you realize that that comes into what we call chargeable income. And then chargeable income really means that that income that is subject to income tax within the laws of Uganda, less the allowable deduction.
Okay.
Anything that is subject to tax with reference to the laws of Uganda, say business income, okay, is what we call chargeable income. And that chargeable income will become chargeable income after reducing or after removing, in simple English, minus the expenses you incurred while you are deriving that income in question. Okay. When we talk about chargeable income, we'll refer to the total receipts or revenues that a business, could be an individual, could be a company, that derives. And when we talk about this, remember the different sources of income we talked about. Okay?
Yeah.
You could have sold business assets. You could have sold rights, and you're restricted to do a certain trade which you are supposed to do in exchange of a payment by a bigger player, say DSTV in this question, the way I use the example.
Yeah.
And then the sale of trading stock, that all comes as business income or chargeable income. But while you're doing that, there are specific activities you do to aid you get there. You have transportation charges that you do to take the different stock, the different destinations of your selling points, okay? Costs of fuel.
Yes.
You have costs of electricity, the bills you incur in generating this income. I talked previously about the salaries you pay to your employees. So these all will constitute to what we shall, the gross revenue is from the sale of the items, the restrictions you accept and you paid,
Okay.
that will all form gross income. But then we have what we call, I factored in allowable deductions
Okay.
before we come in to understand what chargeable income is, or
Yes.
to get the specific rate or the
Well-
specific amount of chargeable income.
What are these allowable deductions, if you may break them down for business community?
The allowable deduction, Joram, and the business community,
Okay.
which I term as the viewers this morning at SMART24,
Okay.
we have what we call the legitimate expenses that we incur in
Okay.
generating this business or this business income. I'm using the word legitimate for a reason. Joram, you can't have a wedding in Aroa for a friend, and here we are, you have business, but you also have your personal car. So you put fuel in your car,
You're moving to Aroa.
you move into Aroa, and the V8 gas was 1 million to and fro. And at the end of the accounting period, you bring this expense as a business expense. No, this
That is a
was
personal expense.
an expense that was domestic in nature, and therefore it is not subject, it's not can't be accepted as an allowable.
So make me
deduction.
understand. Make me understand. So we've had case scenarios where individuals who are going into personal affiliated kind of business tend to add those receipts to the business.
Yes, yes.
And then when you're doing the computing, you feel like it's not adding up.
Definitely we shall, that's when we come and audit. We
Okay.
ask that, okay, this receipt, what was the business intent for this expense?
Okay. The one
That
million
is,
for the fuel.
yes, for fuel, while you're going to Aroa. Okay? How can we match up this?
But if he says he was going to deliver something,
Joram, your business is, say, in Kampala.
no delivery, you mainly
don't
have open.
Yes,
Okay.
yes, yes. And now and moreover on a Saturday, on a Sunday, and you're saying you were going. There are many things
I
that
try to understand. They will still have to track and see which sales were made during that Sunday
definitely.
to bring
Definitely.
to deliver. Okay.
And so if we find that after the audit that it was not a business intent
Okay.
expenditure, then it is called, it's a disallowable deduction. We shall add it back to the chargeable income
Okay.
before we derive tax be paid.
Okay.
Then you realize that local service tax is an allowable deduction for an individual, but also if you're out there, dear viewers, get this clear, that if you have employees, okay, and 5% of your total employees are disabled, and there is evidence to that, we will give you an extra allowance or an extra allowable deduction, which is in the law, of 2% on your chargeable income. This was done in a manner to promote employment of the disabled. Okay? But they should be making 5% of your total employees. It will be an allowable deduction. So, dear viewers, business people, and individuals out there, please get this for yourselves. Employ the disabled as long as they have the qualities and they can perform.
Okay.
Yes. So you'll be given an extra allowance to reduce 2% on tax payable.
Okay.
Yes.
Okay. Let's look at now computation of tax payable.
Before we get the computation of tax payable,
Okay.
Joram, I want to make a few points clear.
On the issue of
the issue of what we will not be allowed
on
as expenses
for the business.
for a business, such that the viewers get this clear. Any expenditure incurred, all those incurred that is domestic in nature, will not be allowed when you are deriving chargeable income, as long as it was private in nature. And then any expenditure okay, or loss of a capital nature on any amount included in the cost base of an asset. The cost base of an asset.
Okay.
And then if you have any expenditure that you can be that is recoverable under insurance or contract, or it is indemnified in therein in the terms and conditions that signed, you cannot come and say it is going to be a business expense. For instance, Joram, if you have a business, a motor vehicle for a company, which was comprehensively insured, and you showed us the insurance expense for this vehicle, remember, in the records, and this vehicle crashes to no recovery, and then Swico pays you back, okay, the 120 millions for the fossil truck. You can't come at the end of the trading period and then you claim an expense that you lost that vehicle and you had, say, to procure another one as an expense because you have been indemnified. You've been restored to your original position by insurance.
Okay.
And insurance, you cannot benefit twice if you look through the principles of insurance.
When you look at this issue of a premium or a similar payment,
yes,
made to anyone, I need to understand more. For instance, if I've insured my business in any way, let's drive it from that angle now. I need to know something. Because if sometimes here you would say a premium or similar payment made to a person carrying on a life insurance, business or not, all that is still unidentified by the taxman.
Yes. But you realize that there are things that are for business.
Okay.
And then there are things that are not business.
That are mainly personal.
Yes. That is the whole thing.
Okay.
So you realize premium or a similar payment made to a person carrying on a life insurance business, will not be allowed.
Okay.
Okay? And then you realize that there are amounts that are paid to any person. That could be, say, someone could if you say purchasing products and the supplier doesn't have a TIN number, okay, we are not able to track. If someone is VAT registered and you procure things there and it doesn't give you fiscalized invoices, how will you claim those expenses? How will you, because we must see the fiscal document numbers for verification to confirm the expenses. Yes. So you realize that if anybody purchases things that are above 5 millions
okay,
from someone who doesn't have a TIN, shall not allow any of those expenses. This is primarily required to promote people to be compliant and understand their tax obligation.
All right.
Because if you are in business, the primary first step is to register for taxes. So how there you come, Joram and viewers, you go and procure things worth 5 million and this person is not anywhere in the tax records. And you want URA to accept. So it is presumed that this person is a ghost, is not there. Perhaps you are also concocting because there is no physical evidence that can be attached to that effect.
Okay.
Yes.
Looking further, let's now look at the computation of the tax payable by the business person, because I really need to understand now if you're to compute it to make it more easier for someone who's watching, a business person who's watching. How do you compute as the taxman this particular taxes for any business?
I want to affirm to the viewers that if they want to understand how we compute business taxes for business, one, they must first have understood what is chargeable income.
Okay.
All the amounts that you have derived from the receipts of revenues generated first. After that,
Okay.
we shall less the allowable deductions. The allowable deductions, the expenses made in generating the income. The other one we've talked about was, say, local service tax for the individual, and then the 2%.
Okay.
If you have 5% of your employees as disabled individuals. And then after that, the remaining amounts will apply the different tax rates. And for the business, for the individuals, you realize that income tax is charged at 30%.
Okay.
Joram, if I had 40 millions
Today. Oh, for your business,
chargeable
Okay.
receipts from the revenues,
Okay.
you realize that if I am going to remove, say, 5 millions
Okay.
as expenses aggregated altogether, from 40 it remains 35. So 35 will become chargeable income,
Okay.
where we shall come and apply the rate of 30%. So 30%, if you can do the mathematics for me, 30%
Okay.
of
40 million.
35 million. Remember, we have removed the allowable deductions of 5 million. Okay? So 30% of 35 million will culminate to be the tax payable under this circumstance. I can see you did mathematics.
Quite well. So it will be around 10 million and 50,000.
Yes, so that will be tax to pay, and it should be paid timely. When we talk about timely,
So that is for a person with business revenues of 4 million,
no, I have talked about, say, if someone earned 40 million.
40 million.
Yes. However,
The revenues.
However, to break it clear,
Okay.
if someone, say, is a non-resident individual in Uganda, if you're a non-resident individual and you are in Uganda and you're earning amounts not exceeding 2,820,000,
Okay.
you're tax free.
Out of Uganda, if you're out of Uganda.
Yes.
Okay.
It is nil.
Okay.
The rate charged is nil. Remember, we talked about the different tax rates. So the rate applied there will be nil. And then, Joram, if you're a non-resident and you earn amounts exceeding 2.82 million Uganda shillings, but they are not exceeding 4,920,000,
Okay.
you realize that we shall charge you 120,000
Okay.
shillings plus 20% of the amount by which chargeable income exceeds
Okay.
4,020,000.
Okay.
We first have the 120 and then charge you 20% at a rate of 20%, by which the remaining chargeable amount is exceeding 4,020,000. And if you are exceeding 4,920,000, the bracket here puts you at first. We first get the 300,000 per put here, and then we shall charge you 30% of the amount by which chargeable income exceeds 4,920,000. However, where chargeable income exceeds, say, 120 million in a year, that means 12 million per month, we shall charge you an additional 10% on the amount by which your income exceeds 120,000. 120 million.
Okay.
This is for people who earn 12 millions and above
Per month.
per month. So we shall charge you the 300,000 plus 30%, by which your chargeable income exceeds 4,920,000.
Okay.
But if you go to a bracket that goes above 120 million, we shall charge you an extra 10%. But the extra 10% will be charged on the amount that chargeable income exceeds 120 million. That one that goes above 120. If it is 120 coming downwards, the 10% doesn't apply. But the amounts that come in extra of the 120, then we shall charge you. That amount will be charged an extra 10%.
Okay, as we're summing up now, I would want to ask whether are there some common errors that you've experienced and during the declaration in income tax?
Yes,
okay.
There are many errors. You realize that I've been talking about them.
Okay.
For example, when someone is declaring the sales, okay, you realize that the manufacturer's input-output ratios are misappropriated. And then the other errors that I sometimes not call errors are like when someone puts an expense which is not supposed to be put.
Okay.
Then there are long treatments of the tax laws, the allowed and the disallowed. Someone fails to understand what is allowable and what is not allowable for tax treatment under the tax laws in question. And then the limited documentation, evidence to back up the expenses, especially for VAT, in the VAT return, and you find that they are claiming expenses which cannot be backed. Which cannot be backed. And in the end, the whole thing gets to be queried, and then we have to come and audit you and perhaps discover other unintended
expenses.
You know, because when we come to audit, we do a thorough audit. And so shall discover many things. So what do I have to tell the viewers as I summarize?
Okay.
Is that they should always have the things proper,
okay,
capture them the right way to save their time. But just in case they have not, something's missing, just in case there is a query they would want to get clearer, because time is not our best ally. You realize that we are always handy. They can contact us.
Okay.
We have an email. You can send their queries on the email, which is services@ura.go.ug. We have a toll-free line, Joel, where you call URA, and yes, you discuss with the taxman. Okay. Free of airtime.
All right.
And the number is 0800 117000. We have another one which is 0800 21700. But again, we are modern. We also use WhatsApp.
Okay.
Whereby we answer you instantly in Luganda and English for now.
Okay.
But in the near future, we shall factor in the other local languages. You choose, you have a man to choose who should answer you.
Okay.
And yes, the WhatsApp number is 0772 140 Or you can visit our URA offices for further guidance. And we are spread all over the country. We have a newly opened office at Boulevard, just opposite post office,
okay,
in Kampala here, in the Central Business District. We have our headquarters in Nakawa, You can get
The
there.
Towers.
The Yori Towers. In Mukono, we are there. Jinja, we are there. Get to Iganga, the Eastern Route, Tororo, and Busia. Soroti Mbale, Moroto, Guru, Chitigumu, Arua Nebi, and Moyo.
Okay.
When you get the western axis, can get us from Masaka, Mbarara, Yibanda, Bushenyi, Rukunjiri, Fort Poto, and not forgetting Hoima and Masini.
All right.
Yes.
And many thanks for joining us this morning.
Thank you.
This is Mr. Twaha Kayondo Mlangira, who is the Domestic Taxes Officer from the Uganda Revenue Authority. And in our In Focus discussion today was basically looking at computation of income tax on the business income. Have yourselves a good morning, but we are still here with Smart Mates Business. Immediately after the break, we've got a quick 30 minutes coming up shortly, which also has TSMB on ground. Stick around.
Good morning.